Hello traders and welcome to NOFT's weekly trade highlight. In a moment you'll see us recreate one of the best trades of the week with NOFT's order flow and market profiling tools along with detailed trade commentary with NOFT Trade Tactics. Our weekly trade highlight is brought to you by one of our own NOFT traders who, in between assisting traders in taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's highlighted trade, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade futures, stocks, options, or forex. From everyone here at NOFT, good hunting out there and happy trading. For this week's trade of the week, we're going to go ahead and highlight the high here on March 15th, right around 11:30 a.m. So 11:30 a.m. is going to be the high there on the March 15th. Here it is on a longer term chart with our volume composite right here, just showing you the high that we're going to be focusing on. Let's go ahead and jump into order flow here and talk about this. As you can see, we had a pretty good run into this area, and as you can see, we have a smaller pretty much volume composite, but this is called the volume at price tool that we have, and this blue area is indicating high or above volume, above value, area. And this is our value area through here. So we typically are looking to trade outside of the value area. So we're not looking typically to take trades in here. But every once in a while we will have a trend day or a trend continuation type of day. We'll take trades in the value area. But for the most part, we are looking to trade when it is expensive and go long when it's cheap. So as you can see here, we had pretty good run into this above value area. We have a trade location, this blue level, right through here. This is a trainer level. These are levels that are highlighted by our head trader on a daily basis. So if they move a level on their chart, you'll automatically see that move on your chart within a few minutes. So question we get all the time is, where are you trading at? And you can actually see this right here on your chart. So in essence, your charts are connected to ours. So it comes right to a trade level here, and we are looking at the order flow, the footprint data here. And on the right side, you have your buyers, and on the left side, you have all your sellers here in the market. These are reflecting executed orders in the market. They're not limit orders that are parked here. Actually, some are probably absorbed orders, but these are active orders here, executed orders here into the market. And as you can see, as we're getting into this level, we have a little bit of buying going on here, but we also, as prices moving higher, we're actually having this red block right here and right here, indicating that buyers are actually coming out of the market. And so we see this here, buyers are coming out, and this red number here are indicating seller aggression or a sell imbalance. So when there is a 300% or greater difference between the sellers and the buyers at a particular price level, then you will see this highlight red. So a lot of sellers highlighted here. And as we're going higher, we actually see the COT position. That's this gray area right through here. This is indicating where the volume is occurring, the highest volume point here in the candle. And you can see that it's kind of caught to the high part of the candle here, meaning that people are aggressively trading this market at the high, possibly even breakout traders or people just aggressively getting long here in the market. So as mean reversion traders, we like to see these players getting caught here in the market. This next candle are indicating a trap. A trap is when there is aggressive buying at the very top of the candle. And this will highlight yellow here. We see 574 buyers here in the market. Even this one here, you see this highest volume point. This is called a naked, we call this a naked COT because the COT is printed outside of the body of the candle. So we see a lot of aggression. You can actually see the breakout traders really trying to get long here at the top of the market. What happens next is you actually have selling coming. These traders are now caught here in the market, and you see selling coming into this market right away. See, you saw a little bit here, but you actually saw a couple sell imbalances here as well. And you see seller aggression coming in here. We'll look at this 1833, and you can see as price is going up, buyers are coming out, sellers are getting aggressive. And let's go ahead and highlight this trade. Let's talk about this. Let's go ahead and move forward here a little bit. All right, so as this trade has progressed, your entry is right over here. as this trade is progressing. This one is a fairly easy one to manage. As you go through and you're looking through this footprint here, you see a lot of red numbers here indicating seller aggression, and you just see that throughout. So this one was actually a fairly easy one to manage. We do have some blue numbers here along the bottom, but as you can see, the buyers really never wrestled control back from the sellers here, and you see a pretty good sell candle here. Price moves up, you're getting seller aggression here again, seller aggression again at its highs, and you see the price start to move down here. Sellers coming back here in a big way. Now you see some buyers taking place here. You see this gray block towards the bottom, but look at this next candle. Bam, you have a sell stack. This is a concerted effort here and here when the sellers are coming in at two price levels and really hitting this market hard. So you can see two sell stacks here and here, and the sellers take the control right back in the market. Look, there's another sell stack here. And where are we targeting? Well, initially we're targeting this yellow level here. This is the value area high level. So this value value area is highlighting where 70% of the transactions are occurring, and the value area high is just indicating that the top of that standard deviation there, the top of that 70% calculation. And initially we're targeting here, but you can certainly see we go through this level pretty easily, and sellers are still in control. The next level to target would certainly be this POC, which is the highest volume point on the day. It goes right into this level here. Just see a ton of selling taking place here. Now, selling is good, but when you have an overwhelming amount of selling, you'll have what we see here is an exhaustion bar, and you see it's highlighted with two double bars here at the bottom. This is exhaustion selling, meaning that sellers just cannot simply maintain this momentum. They're coming in so hard and so fast that they just can't maintain this momentum to the downside. So you have an exhaustion bar here from the sellers, and you can see right away that the buyers start coming back into this market in a fairly weak way. You can actually see that this market turned over and started to come back down, started to flatline here a little bit. But this was a great trade, fairly easy to manage. Just reading a footprint, you can see the sellers coming in and controlling this market all the way down to this POC point here, and then the buyers come back in a weak way, and sellers try to wrestle control back. So we hope you enjoyed our trade of the week. If you have any questions or would like a personal one-on-one demonstration of our system to see how it can fit your methodology, please visit us at www.noft-traders.com.